Hello everyone, welcome back to my channel, the Tax Master UA. Today we are diving into a most critical topic, the hidden tax traps of UAE free zones. Free zone sounds great, right? But when it comes to tax, they are not always as free as they claim. Did you know that? Many businesses get blindsided by unexpected corporate taxes despite operating in the free zones, which could cost your business a big amount and a big time if you are not careful. So, without any delay, let's get it started. Now, before understanding how free zone persons are taxed, let's understand what free zone is and who are free zone persons. So, in UAE, a specified area is designed where business can benefit from specific incentives, regulatory exemptions such as relaxed foreign ownership restrictions, streamlined administrative procedures, modern and sophisticated infrastructure, developed business communities, and the ability of additional legal firms and commercial activities. And a free zone person is defined as a judicial person incorporated, established, or otherwise registered in the free zone, including a branch of non-resident person or UAE judicial person that is registered in the UAE. So let's understand the branch of non-resident person or UAE judicial person. So how it is. Let's understand this by example. Suppose company A is incorporated in India and company B is incorporated in Dubai mainland. However, these companies have branch in free zone. In that case, that free zone branches will also be considered to be free zone persons. One thing to note here is that a judicial persons can only be a free zone persons. Natural persons and unincorporated partnerships are not classified as free zone persons. Even any free judicial persons that is not established or incorporated in free zone, however, they are managed and controlled from free zone, they are still not a qualifying, they are still not a free zone persons. It means it should be registered or incorporated in free zone to qualify for a free zone persons. So understand when can a free zone person become qualifying free zone persons. So as per FTA, any free zone companies or a judicial person that is incorporated in free zone, they are prima facie deemed to be qualifying free zone persons. So, however, to maintain the status of qualifying free zone person, there are certain criteria or conditions that need to be satisfied by free zone entities. So let's understand the criteria one by one. Number one is the free zone person must maintain adequate substance in free zone. It means the first condition is adequate substances, which requires a free zone person to undertake the core income generating activities in the free zone. If any company is incorporated in free zone, we need to analyze what is its core income generating activities. Core income generating activities mean here any key or most crucial or value added action that any person undertakes to generate revenue. So after analyzing that core income generating activities, now the income generated from such activities shall be performed or undertaken in the free zone itself. And other condition is that to acquire that income, to generate that income, what are the related expenditure? It may be operating expenditure or expenditure related to assets or expenditure related to full-time employees. Yes, that these expenses should also be incurred in the free zone itself. After uh, after these two conditions are fulfilled, then it is assumed that adequate substance condition for becoming a qualifying free zone will be satisfied. The other condition is that the free zone person must drive qualifying income. So UAE government or FTA, Federal Tax Authority, has classified income for prison person in two parts. One is qualifying income and other is non-qualifying income. So the prison persons must acquire or drive qualifying income. So let's understand what are the activities will be considered to be income derived from qualifying income. Number one is transaction with other prison person. Suppose company A is incorporated in prison 1 and company B is incorporated in prison B, in prison 2. In that case, any transactions they are doing activities, the activities they are transacting should be considered to be qualifying income if these activities is from qualifying activities list. It means it should not be from excluded activities. And other condition is that beneficiary recipient. So out of these two, one should be supplier and another should be recipient. Yes, the recipient should be beneficiary, the prison person should be beneficiary recipient. Beneficiary recipient means who has the legal right to use and enjoy that goods or services and are not bound to deliver or transfer that goods or services to any third persons. It means it should not be acted as a agent. And other condition, other transactions is that the transaction related to qualifying activities that are not excluded activities. So I have attached the PDF for the list of qualifying activities and non-qualifying activities in the comment section. You can go and read in the detail. So the income should be related to qualifying activities which are not excluded activities. And other is that income from owning or exploiting qualifying intellectual property. So intellectual property means intangible assets which cannot be used or implemented without the consent of the owner or the person who have created that intellectual property. Can be trademark, patent, technical know-how, goodwill, etc. So these intellectual property are still again classified in two parts: qualifying intellectual property and non-qualifying intellectual properties. So the income from qualifying intellectual activities will only be included in qualifying income, and FT has provided a formula to calculate qualifying intellectual properties income and non-qualifying intellectual property income. We'll make another video how to calculate qualifying intellectual property income and others. And other third condition is that third transactions is that if the free zone meets the de minimis requirement. So again I am telling free zone income are divided in two parts: qualifying income and other non-qualifying income. Yes, it does, just because you are driving some non-qualifying income does not make you disqualified for free zone, qualifying free zone. It means FTA has set a certain limit for non-qualifying income. Yes, you have to maintain that limit, means your non-qualifying income should be below that limit, then you will be still qualifying for qualified free zone person. However, there are certain source of income, there are certain sources or activities, even if you are doing that activities, even if you are doing activities that is included in qualifying activities, then this source of income will still be considered to be non-qualifying income. Number one is income from foreign or domestic establishment. So any companies which have foreign establishment in permanent establishment in prison companies in prison, and income deriving whether it is from domestic or foreign does not matter. Any income they are getting from the permanent establishment irrespective of the nature of the activities, they will be qualified for this. They will be regarded as non-qualifying income. Other is income from immovable properties. Yeah, again, divide immovable property two parts. One is commercial properties and other is non-commercial properties. So that if that commercial properties is transacted between free zone entity, one free zone company to another free zone company, in that case, the income derived from that immovable property or commercial properties will be regarded as qualifying income. Apart from that, all the income, any kinds of income derived in respect of the immovable property will be considered as non-qualifying income. And again, income from intellectual property. So again, on first part, I have discussed qualifying income, how can we calculate, and on second, after remaining will be non-qualifying intellectual income, property income. So let's move to next condition. Number one, free zone person must have elected to subject to standard corporate tax rules and rates. As per Article 19 of Corporate Tax Law, normal tax rate is described, which is 0% up to taxable income 375,000, and more than that will be taxed at the rate of 9%. So the any free zone person should not have elected that normal tax rate. You may have questions, right? That if qualifying income of qualifying free zone person are eligible for zero tax rate, why should anyone choose the 9% rate? Yes. Look, first of all, calculate total taxable income. Now, calculate before choosing going for qualifying income. First of all, let's make assessment of your income tax, taxable income. Calculate taxable income. Now calculate the tax at the rate of 9% or 0%. Suppose amount X is derived. Now calculate the total expenditure you need to satisfy the condition to be qualified free zone person. Suppose expenses amount come Y. Now compare this: X taxable expenses, Y expenses to be incurred for maintaining the conditions. Now if the taxable income is lower than your expenditure, why should anyone choose qualifying free zone? If already they need to pay less tax. So in that case, there may be certain entities and they may not choose qualifying free zone persons as a qualifying free zone persons. And other condition is that arm's length principle. The free zone person should meet with arm's length principle. What does it mean? Arm's length principle, simple meaning is that any transaction between connected or related persons should be at market price. Suppose Mr. Company A is transaction with company B, which is not related or connected, and company C, it is connected. Now suppose any goods and service supplied to Mr. B and C at the same price. Maybe there may be some little difference, like suppose if supplied to Mr. B, company B is at 10,000 dirham and company C is at 9.5 thousand. There is the difference is so reasonable. 0.5 thousand is so reasonable. However, if that same goods are transferred to Mr. C at only 5,000 dirham, in that case, it is assumed that the transactions or the activities between the related or connected person is not at arm's length price. So, to qualify for qualifying free zone person, you must, or free zone person must need to maintain or comply with arm's length principle. Again, transfer pricing documentation. So, the any transaction between the related or connected person, in that case, transfer pricing principle should be maintained. Transfer pricing principle should be complied, which says that transfer pricing documentation such as master file, local file, and disclosure form, this should be properly maintained by the free zone entities if they are doing any transactions between connected or related persons. And other is free zone person. Free zone person must maintain their financial statement, must audit their financial statement. So free zone persons should get their financial uh, statement at the end of every corporate tax period audited from the auditor approved by their authority. And the most important and most confusing characteristics is the de minimis requirement, the condition of de minimis requirement. What does it mean? Let's understand. Since the income of prison person is divided in two parts, qualifying income and non-qualifying income. So simply because you are earning some amount of non-qualifying income does not make you ineligible for qualifying prison person. If you meet this condition, number which is 5 5 million dirham or 5% total revenue. So how will you calculate total revenue? Number one, income from qualifying activities. Number two, income from non-qualifying activities. Now add these two types of income. Suppose amount X came. Okay. Now calculate 5% of that X amount. Suppose amount Y come, 5% of X is amount Y. Now compare that amount Y with 5 million dirham. If your non-qualifying revenue or income is below 5 million dirham, in that case you will be supposed to meet the de minimis requirements. Otherwise you are supposed to not meet the de minimis requirement. After understanding all these conditions, now suppose you fulfill all these conditions, now you are qualifying free zone person. So how will your income be taxed? Let's understand. Since income are divided in two parts, qualifying income and non-qualifying income, yes, the qualifying income will be taxed at the rate of 0% irrespective of its amount. Any amount, it may be what can what, it may be a huge amount or little amount, that all qualifying income will be taxed at the rate of 0%. And if you have any non-qualifying income, in that case that non-qualifying income will be directly taxed at the rate of 9%. It means you will lose the basic exemption, which is 375,000 at the rate of 0%. Yes, you will lose that basic exemption limit if you qualify for qualifying free zone person. Similarly, qualifying free zone person is not eligible for certain other reliefs such as a small business relief, qualifying group relief, business restructuring relief, transport tax losses, or the tax group regime. When I made a video on small business relief, I had mentioned there that qualifying free zone person is not eligible for a small business relief. Now you may have got the idea why it is, because since qualifying free zone person is already taxed at the rate of 0% on qualifying income, so if they were allowed for a small business relief, there was double benefit for that person. That's why they are not eligible for these reliefs, since they already got benefit of 0% tax on their qualifying income. Now you may be thinking that what will happen when we lose the status of qualifying free zone person, or what are the event that will consider to be losing the status of qualifying free zone person. Yes, there are two conditions when you will lose the qualifying free zone person. Number one, if you choose normal corporate tax rate under Article 19 of the corporate tax law, or if you fail to meet any of these conditions, in that case you will supposed to be losing the status of qualifying free zone person. And what will be the consequences? In that case, for that particular period you are not eligible to apply for qualifying free zone person, and again in future for subsequent tax period you have to pay the tax at normal tax rate. It means you will not be able to able to apply for qualifying free zone person. At last, thank you so much. If you think this video have helped you in any way, or anyone you think could be benefited, please to share, like and subscribe. Also, please write in the comment section on any topic you want to listen or you want to learn. in respect of UAE corporate tax law, UAE VAT law, IFRS, please do write in the comment section. Thank you so much.